Joining me now at Post 9 is the top retail analyst on Wall Street, Matthew Boss of JPMorgan. He also covers leisure. Welcome back. It's good to see you.
Good to see you, too.
So let me get your first reaction. Retail sales, were you surprised?
No, it was encouraging. So we've been
you weren't surprised?
We've been on the show and we've been talking about the tale of two halves. And I think that's what you're starting to see play out, meaning I think you've seen the low watermark in retail sales. That was your first quarter. That's where you were still going up against a better consumer backdrop a year ago. And you pulled $25 billion of government assistance from this consumer. You cut their food stamps and their tax refunds were down double digits.
So when you say that the tale of two halves, are you talking about the high-end versus lower-end consumer? Or are you talking about time frame of what we could do and then what we might not do?
Both. So front half of the year still had headwinds. Back half of the year, you have easier comparisons. Gas prices down 30% year over year. On top of that, you have supply chains that are normalized, and you have a wealth creation. Look, S&P at 4,400. I mean, you look at the high end. There's some real wealth creation now over the last 5 years, but also by income demographics. So as we talk about the high end relative to the low end right now, in my opinion, is normalizing. So they still have a job. The unemployment rate is solid right now. Their wages are up 20% relative to 2019, but you took money out of their pocket. That could take a quarter or two to normalize. That's why I think back half of the year, the tailwinds will now outweigh the headwinds, with student loans, as you cited, one of the wild cards to watch.
But how do you then explain why, like, for example, Estee Lauder hasn't done well, which is as high end as you can talk about, and then some of the other brands too that are within that realm? The name is some spacing on the name, the Versace
Sure.
and Michael Kors.
Yeah,
you know what
Capri.
I'm talking about?
Yep.
Yes, Capri. What's up with that?
So I think what you have, again, if you look at trends on a 4-year basis, so we look at the Chase credit card data, it's been remarkably resilient, and I think that's the underlying trend. But on a 1-year basis, as you look at retail sales, the last 3 straight months, you have seen moderation, and those, in my opinion, are tied to the normalizing headwinds versus tailwinds and the wallet share analysis that we published earlier this week that points to that low watermark being the first quarter of this year. Second quarter comparisons ease, and back half of the year and into 24, the tailwinds actually outweigh the headwinds for the consumer.
The student loan. Oh, by the way, you have an overweight on Capri, so you're not concerned enough to think about your rating or estimates or anything?
No, I think the handbags and accessory space, look, over a 20-year period, you have very consistent top-line growth of mid-single digits. And at this valuation for both Tapestry and Capri, I think I think as you think about the consumer backdrop, it's conducive for discretionary purchasing as we look forward.
This was I was alluding to the 36% downside this year to date for Capri. Student loan resumption, the payment resumption. Just as back to school is going to get hot and heavy.
Yep.
How much of a problem is that going to be?
So you've had a $30 billion swing in inflows versus outflows to the negative in March and April. Tax refunds is a $10 billion outflow. So the situation going forward is still in positive territory relative to what the consumer faced in March and April, but it is an incremental headwind. Now, the question is gas prices. That's a $40 billion tailwind. I mean, last year in the second quarter, gas prices ratcheted higher by 50% from the start to end, and you are cycling the lowest consumer sentiment in the history of the reading last year in June.